Hey guys, Freaky Finance here. Last week we looked at Indigo in Canada, and this week we're gonna go to China for Baidu. Actually, I'm probably gonna do a little series on China, just because there's so much relative value there, in my opinion. But today we're gonna do Baidu. Some people know what Baidu is. Most people would translate it into the Google of China, but it's been trying to be more than that for quite some time. And we're gonna go into kind of like the good and the bad of Baidu, what's kind of been going on, why it's been kind of stagnant, and also why I'm looking at it. Now, the reason why I'm going to do a China series is really because of value. You're just seeing the P, say it was going to 10 for a bit there, even up to 12 times earnings. Now it's down to 6. So it's been cut in half, the multiple, relative to its long-term average. Right, it's trading in there with Turkey and Israel, which are both more relatively war zones, right? So it's priced dirt cheap, right? You're talking almost like if Canada's at 15, China's at 6, right? Gives you some type of idea relative to the opportunity set that's there. Ultimately, that price for a reason. There's geopolitical risk, stuff like that. So if you're not interested in taking that type of risk, then this video won't be for you, because that doesn't change anything that I want to talk about. But there is no denying that the relative value, at least to itself, has been there. People will bring up the VIE structure, but it was a VIE structure here, right? So it's not the catalyst for why it's getting cheaper. It's really because of the policies that China has done really since COVID, and continuing to be more and more less business friendly. And we've seen the rotation from China to India, right? India is now nearing all-time PE records, and China's at the all-time low. Another perspective here is just a large cap ETF FXI, and you can see losing money on the 1 year, losing money on the 3 year, losing money on the 5 year, and losing money on the 10 year. So if you held this for 10 years, you've lost money in China. And that's why we've seen outflows from China over the past 3 years, not only from a policy, probably error standpoint, but momentum feeds on itself, right? China's terrible, right? So the last 3 years have been like that, and it has been terrible. And so now you're kind of like, okay, why are you getting in? And part of it, I just think it's overdone, and I think they're finally getting it, that they're overdoing it on clamping down on business in China, and they realize that they actually do need businesses to succeed there in order for things to self-clear. And that's one of the challenges that you have to deal with when you're a communist country, especially because basically you need to invite in market forces. They work for a reason. I'm a big fan of creative destruction, so let's actually get into Baidu, but this is going to set the tone for the next few videos, I think. So here's the emerging country that some people say China still is. I'm joking there, obviously it's very developed. Probably has the best infrastructure in the world at this point, but that doesn't mean that you can make money there. As we've seen over the last 10 years, only people who made money in China have been the Chinese, probably. Anyway, Baidu called itself an AI company first, and the CEO has been very clear on this. Still owns a large percent of the company, still has voting control, and he's still in it since inception. Anyway, been very clear that it's AI company first. It's up Ernie, stuff like that. We'll talk about that real quick. As far as we're concerned, for backwards looking numbers, not really there, since this is more of a really Ernie 4.0 didn't even start till October 23, and that's probably the more powerful one so far. But you can see it doesn't really even talk about search. It brings up the mobile ecosystem, like to the Ernie bot again, talks about AI cloud, talks about their intelligent driving, which we'll talk about as well. And then it finally brings up the actual app, which 667 million users. Again, China has a lot of people, so it has a lot of users. Now, this is just what I want to talk about real quickly before I jump into the financials. You can see that there's kind of 3 Baidu core segments, and then they have this kind of, I'll just call it Netflix. But again, it's very different, especially because the ARPU here is like, I don't know, something like $2 or something, $3 a month. This is just basically think Baidu core. So you have the search function, you have cloud, so that's your cloud service provider. Then you have things like Apollo for driving, as well as some smart devices that we'll talk about. And I'll murder the Chinese pronunciations of some things. So if anyone from China is listening, I apologize ahead of time. Maybe before we jump into this, let's actually go through the numbers. Well, before I should do that here, basically I do own this one. I'm looking to get in cheaper as per usual. I put Alphabet up here because I well, it is kind of like Google search in a way. Google, in my mind, is the superior, just far superior, especially over the last 5 years in terms of search dominance and the margin profile. And you have things like YouTube, which you're watching now, stuff like that. But it also has a cloud service provider, right? So it has there's some similarities here. Obviously, Alphabet's at 18, 19, 20 times earnings, whereas Baidu's at, say, like something like 2 times EV to EBITDA, something very cheap. A lot of these companies, we're going to do JD too, very cheap relative to themselves as well as to other companies worldwide. What else? I've also kind of been looking around the world for other things. So Coupang's there, JD's there. These are just smaller positions to try to like build confidence around. And then I have ones that I just kind of picked up in February. One of the cues that I listened to is I think it was on Bloomberg, there's basically a bunch of crying in early February, just how bad things were. And January was horrible again for China after 2 horrible years. And I was like, geez, how bad is it? And I look at the valuations, I'm like, wow, these things are priced like they're going away. So anyway, I started allocating there, and I will likely continue to do so. But anyway, so let's jump into the last, I guess, 6 years for Baidu. I just kept going. I was trying to go back to 2018, 2019, try to get a base year, like from the pre-COVID era, because the policies have been so drastic in China to try to help with noise, but it's still very hard. Anyway, here you can see really the core marketing revenue has been flat for 6 years. And so that's one reason why you'd expect the growth multiple, or sorry, the PE multiple to come down, and this valuation in general is a lack of growth in a growing economy. So this is kind of interesting. This would imply that there's competition in search. And we'll talk about Tencent and Alipay and how they have their own kind of, well, WeChat's like a super app, right? So if you can search inside the app, do you really need Baidu? That's probably the biggest risk to this investment as it stands today. And I think that's part of the reason why it's cheap. But I also think it's overlooking this growth here and other revenue going from 3 billion to 7.5. This is in US dollars. And lately, well, the margins, I have not as good as Google. The margins have actually improved. This is actually the highest margin year over the last 6 years anyway. But you can see the growth here has been relatively lackluster, right? Like here you could see some pretty big numbers. Here you had a spike during COVID shutdowns, but ever since then it's been kind of lackluster. Maybe this accelerates, maybe it doesn't. It's hard for me to know, but I do think this is probably going to accelerate because that's the AI function. If ErnieBot is successful, and I mean, getting Apple will be a nice win for them if that's true as well for their iPhones. Anyway, we can see some scale here in SGA. Early it's been relatively stuck. Some scale lately in R&D. We'll talk about the employee mix. It's kind of interesting. And what was also interesting is we just saw Intel and Google increase the server depreciation to try to basically juice EPS. Now, that's not why they're doing it. They're saying basically the products are lasting longer so they can increase the useful life. But we haven't seen that at Baidu yet. So I think that's something that might happen, which would again make the company look like it's making more money just by extending the life of the servers. We'll see if they do that with the next generation stuff. I mean, they don't have access to NVIDIA, so maybe they can't. But anyway, they do have, so this is, on the surface it looks really good, right? You're making net interest income instead of expenses. A lot of Chinese companies actually have a lot of cash on the balance sheet. So this is true for Baidu as well. Right here you can see this. So the market's only valuing Baidu at about 37 billion, but they have about 37 billion in cash and about, call it 20 billion in net cash. Anyway, they're making interest on that. Now, we're going to go through the balance sheet a little bit more detail, but the funny thing here is that they're only making like 3% a year on the short-term investments, which is like 23 billion of this 37 billion. And I don't believe that's a good use of capital. And they've held this forever. Not using it, not taking out competition. Like if this was an American company, you'd be doing something. You'd be taking action when your whole economy hasn't, like all your shares of all, like your whole FXI is down 2% on 10 year, right? There has to be opportunity here for put cash to work and buy something, buy some competition, do something to get this growth going, and they're just sitting on it, making 3% a year forever. It's like, okay, like why aren't you buying your shares back more aggressively? Like we have seen, this is one of the reasons why I'm kind of looking at China now, is we are seeing more and more like JD just raise share buyback, increase the dividend. We're seeing a lot of smaller caps even start increasing the dividends, right, or increase buybacks. And I think that's going to continue. But at Baidu, we haven't really seen that yet. We haven't seen that. How do the foreign investors get paid, or how to, right? always seen as more just hoard cash on the balance sheet, slowly pay down debt, which is fine. But I mean, at some point you're going to be like, okay, where's the remuneration for me being loyal to you for the last 10 years, right? So I think that's what's happening now, and I expect them to do something with this cash. What else is there? So the balance sheet's fine. The numbers are fine. They're just not growing that great. Technically, this last year was actually a pretty solid year. And all we've seen during a solid year was the share price go down. But we saw the entire space do that relatively, right? We did ride PDD up. Anyway, you can see that currently right now, you've seen the fundamentals actually inflect back positively, with the share price just continuing to go down. At the peak there, it was worth about 75 billion. It's actually worth 57 billion in 2018. Now it's only worth 37 billion. So you're getting a superior company for a cheaper price. You can see that as well on the CFO generated, as well as the free cash flow generated, still putting up some good numbers back to 2018. But you can see that, like, oh, it's just back to 2018, right? It's been stagnant for 6 years for a company that's supposed to be the cutting edge AI in China. Anyway, and then like I said, lackluster remuneration for shareholders. What else can I say here? The EV is very cheap. Again, part of that's just low valuation with a lot of cash on the balance sheet. So basically, you're getting a company that's, say, valued at $10 billion US, that's generating 3.5 billion in free cash flow. So very cheap in terms of free cash flow. It screens relatively cheap. Not as cheap as a couple other ones, but very cheap for what this company could become, especially if you believe half the hype that AI can bring, and if this company can actually deliver on any of it, it should be high. And even like the Google, I haven't gone into why I'm in Google still, but a part of that is just the ROI. It should improve with AI. The targeting should improve with digital advertising. So we should see a higher return on ad spend for digital advertising, which should translate in China as well. But so far, we have not seen that at all. Like last year, US digital advertising, just up to the right, like some of these companies are putting 20-30% growth. China, you can see, went up 5.7 year over year, and that's after a -8 comp. So just very, like, something here is missing. Or it could be the competition from the super apps, 10 cents, right? Taking the eyeballs on the WeChat, just keeping them in the app, search within the app, right? But again, the valuation is very undemanding for a company that's still growing and putting up relatively record numbers. In terms of the segments, we talked about these briefly. Marketing, so advertising dollars is the main one. They have seen some increase year over year, specifically in travel, e-commerce, healthcare, entertainment, media. Though you have to remember 2023 was not a great year for China, as referenced by the share prices only going down in 2023, as well as 2022 for China. Here you can see ARPU, so the average revenue on account, they don't say ARPU, but basically went up 19K per customer, which is about 5% year over year. So they have seen some increase in advertising, but I mean, we saw 15% for a lot of the US companies in the same time period. We are seeing some growth in cloud, but again, it's not as high as the US ones. I do think this is underappreciated because it has been growing. It has periods of a lot of growth, and it's kind of like slow, then it goes up, accelerates again. So this one's hard to measure, but it is going up. And then, like I said, they have Apollo and the smart devices. That segment is growing 8% or 18% year over year, which is superior, but still relatively small in the business. It's not even 10% of Baidu or. What else is there? So in terms, I just wanted to see what they were invested in, right? So not just, yeah, they're just short-term investments making 3%. You can see that here, right? Here they say of their 23.6 billion US in held to maturity short-term investments, which are between 3 and 1 year. They only made 721 million. So 721 million to 23.6 billion is 3% a year. So do I think that's a good use of capital given the corrections we've seen in markets? No. And it's been sitting there forever, not doing anything. So like, either you're gonna do something with it, put it to work, because 3% return is unacceptable for a company like this at the cusp of something that's supposed to be like amazing, right? This company has to be doing something with AI, just doing something, right? With this cash, buying stuff, buying back shares because it's dirt cheap, 2 times EV, right? Like, frick. Anyway, that's just my opinion. On the long-term investment side, similar, it's parked. I think that's making about 5% though. Yeah, 5.05, same thing. And then in terms of equity method, their biggest one on the books is Trip. You can see 2.9 billion for equity method investments. That Trip.com is still 2.1. They've actually sold some. They still have 9% of the company. The company's actually done well because travel is still recovering. We actually saw domestic China recover, and then international China finally followed suit. We don't really need to talk about Geely here, just given the valuation size is relatively small after that. But a lot of the cash and cash equivalents is literally just parked in short-term treasuries, making 3%. We've kind of already talked about the segments, but it is worth bringing up that it is pay for performance online marketing, and they do say here that enterprises in the public sector have been the growth engine for cloud revenue, so they flagged that over personal cloud service. So enterprises in the public have been the main drivers for Baidu's cloud. In terms of the COGS, they do have the traffic acquisition costs. This is probably an interesting one. It's just the headcount reduction. So we did see in the annuals that we actually saw some expenses come in while others did not. But how it breaks it out is interesting. So of the 38.9k employees remaining, 21.8 is in R&D, 8.8 is in S&M, only 6,000 to actually run the company, and then 3,200 in overhead, 8%. Anyway, in my mind, when I see R&D has 55% of the employees, I'm like, well, that sounds good, right? Like, that means they're investing in their future. It also means if they really wanted to squeeze the economics of the business, they could just slash the R&D and cash cow the search business, right? That seems to just be stuck there anyway. And like your S&M seems to be doing anything. So I just think there's a lot of room here if they ever wanted to cut the fat. Now they have reduced it by 14.7% the headcount. But when you look at the financials here, you see, okay, if 55% of your headcount is in R&D, why is your R&D expense barely bigger than your SGA, right? I don't know. So that's probably like, I just think there has to be some type of fat here, or maybe they're expensing some of the COGS. It's just interesting anyway, how little employees are actually required to run the business for Baidu search. Here's a strength of Baidu is that they do have the original founder there still owns 18% of the economic interest and 60% of the voting shares. Anyway, in terms of margins, unfortunately they don't break out they break out Baidu Core and the Netflix, but they don't break out the individual parts within Baidu Core, which would have been nice to see what they're either making specifically on the search part and advertising part versus what they're, say, spending on the auto part and the Ernie bot and stuff like that. But anyway, they kind of lump it all here. But you can see the main margin winner is Baidu Core. This kind of Netflix thing, I was looking at it, and it is interesting. It's just that why are they charging so little per user? And why do they only have 10% of the Chinese population? So again, that invites, there must be their competition or something here that they're not executing as well as they could have. Ads, so how you advertise, so you have your traditional search ads, akin to Google ads. Within the Baidu search results, you have the display ads, which are the attention ads, the banners. And you have feed ads, which are in the Baidu's news feed, stuff like that. Pretty standard way to express them. I did mention they have 670 million users on the Baidu app. Cloud service, again, the main growth driver in 23 was infrastructure as a service. So that's your cloud compute. But a lot of these things, basically you rent your infrastructure from Baidu. The auto side is kind of interesting with robo-taxis, but the thing is we don't actually know what the economics are. So I don't know what the return on this has been, or has this been a project that basically was at cost or even lost money just to make it for the government so they could say that they have it, right? I really don't know. Here's some more information if you want to freeze frame it, but they do have the robo fleet. They are in 10 cities, so that's Beijing, Shanghai, Shenzhen, Guangzhou, Wuhan, Chongqing, Changsha. They have a decent footprint for autonomous driving. Apollo Go, they're free download, all major apps in China, and they did 3 million rides last year. But again, we don't know what the economics are. So they claim most of their revenues from software licensing. So Baidu, or however you say it, that's kind of what I would call like the Amazon Internet of Things, basically your smart home. And it doesn't have to be Amazon, it could be Google Nest, stuff like that. So you have like a smart intelligence system, smart switches, smart lighting, smart door locks, right? Smart temperature and air sensor, Nest, your smart sweeping robot, your smart bed. Again, your basically just trying to get that Internet of Things ecosystem in your house, right? You have smart TVs, sound bars, stuff like that. But again, we don't know the economics of that by standalone. Now, and they claim here that they're ranked number one in smart display shipments and smart speaker shipments for China for the first 9 months of 2023. So that is interesting. In terms of the Netflix, the main driver, as we saw here, is the membership services. You can see that's 2.8 billion of the 4.4 billion that Baidu gets. Baidu owns a portion of this company, which you also buy as a standalone if you wanted to. And they do claim that they have 111 million subs, average daily users, not subs. What it looks like, it kind of has that Netflix feel, but again, you can pay premium for VIP for $1.99 for the first month. A lot of it's ad supported, and I just think the membership just appears very cheap. So here they put it instead of ARPU, they have average revenue per membership during a month, and they say it did increase year over year by 6%, but it increased to 13. So 15 renminbi a month. And so for Americans, so 15 divided by 7.25. So you're talking 2x dollars a month to subscribe to watch stuff on here, which means the content to finance that has to be either very cheap or they must have some type of agreement where they get paid based on how many people watch it. But anyway, it's just, how are you not growing more when you're so cheap? And we do know the standard of living has only improved. So I just feel like the ARPU it is barely increased as the standard of living in China has increased. And I don't know why. Are they afraid to push prices because there's so much competition for other eyeballs and other platforms? Right? It's just weird that you're charging such a low amount. We didn't talk about Baidu Maps. Again, they don't break out the financials just for that segment, but they do have that as well, which is partially what the success of the Apollo runs on. Robin Li, like I said, has a decent amount of exposure still. It is nice when a founder's still in the company making decisions. I think that's one of the reasons why we're seeing this push to AI more heavier lately. I think a part of that is also because they're not seeing any traction on growth here really over time on the actual Baidu search part of the business. So we are seeing this growth here. And again, we're getting close to the point where this other revenue will actually be more than the marketing revenue. So we're not there yet, but at some point this AI push might actually put Baidu kind of in a different mindset than just to search for China. It might get away from that, be like its own new thing. So they are doing stuff there and they are pushing stuff. So I do like that. They're trying things. They're not just sitting there. Though I do wish they would have used that war chest of $37 billion, right? Especially when the market's obviously not, almost basically saying it's worthless because you're not doing anything with it. One of the cool things, like when you look at a stock chart of Baidu, is that it hasn't really moved now over the last 10 years, right? So we've seen basically, it has moved, but right now we're at a price where it's basically back to 2010, 2011, right? So you're getting a price that's 14 years ago. Well, the EBITDA has gone from, call it like 650 million to 6 billion, right? So you've basically 10x the EBITDA of the company, but you're getting the same price. Now maybe that's because it was overhyped here. Now it's underhyped here, probably. But that's just me. And the same thing on the sales, right? That also shows up here where we look at sales. You're at 1.1 billion in US sales. Now you're at almost 19 billion in US sales, right? And you're getting the same price. So obviously things have changed. Multiples have come in. The growth has been relatively lackluster for the core business of search. But you can see the multiples easily come in more than the decline in the business fundamentals, because technically the decline in the business fundamentals isn't happening. It's just a slower growth rate. So we are seeing, in my mind, a relative value to itself over time. And I think it's just, it just screams very attractive, especially if there is any traction with the Ernie bot, with Apollo. Right? It just has a lot of levers that I think are underappreciated at a specific point of time, let alone the cloud service business, which could be also another easy win for these guys in the long run. But we'll have to see how that plays out, right? Because we haven't seen superior execution from Baidu really in any of this stuff they've done, right? They've kind of like, they'll get a lead and then they kind of give it up, or at least that's what it kind of feels to me. Now, obviously, I'm in it because I think the value is there anyway. Like at some point, this thing will probably just re-rate with the Chinese economy, just mean revert. But I do think it's interesting. I thought it was timely to do Baidu. One, because I actually had the 20F up, so that was good that I could actually read through it, right? Because these things are 350 pages. But it's just an interesting company. I'm gonna do a couple more. Ideally, I like to buy it under 100, but we'll see. We'll see if I get it. It's been getting pounded for years now, China. So I'm trying to be opportunistic and wait for a weekday and buy something that I want. Anyway, I'd like to know your thoughts and have a great rest of your week.